You say that there are many studies that say that investing with ESG in mind doesn't pay off as well. I'm wondering what studies they are, and if you can just sort of lay the groundwork so we can understand how those who have retirement funds that are invested in this style are missing out in terms of returns.
Sure. Well, you think about a retiree, they're primarily interested in return on investment, growing their portfolio, and that requires a focus on fiduciary responsibility and rate of return versus appeasing the woke left in some of these ESG priorities. The bottom line is, as we look forward, and we're seeing this right now around the world, as we're seeing the energy crisis that's unfolding now in Europe, the energy inflation we're seeing here in the United States. You go back to policies that governments put in place, particularly Germany, started to shut down nuclear plants, shut down coal plants, and now they've got a crisis where Germany's electric prices are 10 times what they were a year ago. Europe is in real trouble. This is moving from just a energy inflation now to literally life and death as we move into the wintertime. These kind of ESG policies where you have woke government leaders who are putting pressure on companies to adopt these woke policies to shut down carbon type sources of energy which are affordable and reliable. This is a huge problem, and it creates risk as it relates to financial return.
I understand that. In terms of if you're a retiree and let's say you're sitting in the state of New Jersey or New York or wherever you want to cite, Senator, how are you missing out? I mean, are there certain retirement funds out there, or are there a number of assets that you know of that are invested in ESG, and so therefore you can say these investors are not getting as full returns as they may have if we were able to ignore ESG?
Yeah, well, we encounter those challenges as we, in the committees I serve. I'm on the finance committee, the banking committee. We bring leaders in from banks, for as an example. Are they making an investment solely based on what's best for their shareholders versus this stakeholder craziness? It's the shareholders that ultimately matter. When you own a stock, you are a shareholder. And as somebody who worked for 28 years in the private sector, including for a Fortune 50 company, our responsibility is to our shareholders to ensure we maximize return on investment.
Isn't that what fiduciary means, though, Senator? I mean, as somebody who administers a retirement fund or is in charge of, is a CIO of a retirement fund in the state, doesn't fiduciary in and of itself mean that their primary interest is the return on investment, or should you actually go after the definition of fiduciary as opposed to specific policies?
Well, you're exactly right. It's the return on investment, and the challenge we face is these stewards of these funds, retirement funds, as an example, are basically trying to earn brownie points with the left and their woke agenda versus solely focused on fiduciary responsibility. And that's why they'll say that climate change is perhaps the greatest financial risk we face moving forward. Well, that moves into really more of a political discussion versus where's the best place to invest the dollars for retirees to ensure they maximize their investment and the return on investment.